Hello, 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 everyone. Happy day after Fed Day, Unemployment Thursday. How's everyone doing? Good morning, Patrick. Good morning, John. Good morning, Sterling. Boy, there is no inflation in Sterling just because everything's rallying, including commodities. Did you see? Did you see the Philly Fed prices paid? Oh boy. Hi, Charles. Good morning, Jacob. Can we look at Oracle? Remind me. Oracle. Hey, Kalani. Thank you for tuning in early out in Hawaii. So, again, thank you everyone for tuning in. We had the 50 basis point cut yesterday. Not quite the Elizabeth Warren 75 basis point cut, but 50. Shocking the market a bit. Well, by the way, really start watching what happens next week. That's going to be key. Don't get. I mean, it's having the rally of everything today. But really watch with the especially the financial futures. What happens next week after uh, well, we'll still call quad witching, even though it's technically triple witching. But let's just still go with the quarterly quad witching title because so many people still use it. That happens tomorrow. We get massive OPEX, and everything's not out of the woods yet. So let's just pay attention. I'm not shocked that, well, again, with the 50-point cut, it's party up, party on. Wayne's World. Let's party on. And let's see how we're going into some very key levels with the S&P going into the options expiration. All right. I'm not saying it has to stop. What I'm saying is we're going to get more information next week. We have yet to have a major sell signal trigger. So running a dirt bike yesterday, so no trading. Got back just before the announcement. So housing starts picked up on data front. Powell also mentioned the deadlock of buyers. Hit the like button. Hey, PMG. Yeah, housing starts, which I was sort of surprised at housing starts number. Sort of surprised at that. Oh boy, even around here, you should see the amount of people just react to, oh, I can raise my house price because Fed cut 50 basis points. Did you notice mortgage rates went up yesterday because the 10-year is holding firm? The 10-year is holding firm and slightly rallying, so that makes yields go up. Going to get very interesting. Now, we had initial jobless claims come out much better than expected. We had continuous jobless claims come out better than expected. I mean, completely warrants a 50 basis point cut. Here's the big thing for me that jumped out. Philly Fed prices paid. Prior 24, now 34. It's just a regional index. And I'm not saying inflation has to go back. It's not going back to 7, 8, 9% right now unless there's a major, like if China goes into Taiwan, we get some it get very interesting again with supply side stuff, and that could ramp up inflation. If we get into some bigger wars, that can ramp up inflation. What I'm saying is separate from this. It might be stickier than people think. And if things are tipping over and stuff is stickier, like let's say it let's say it holds around 2.8, 2.9, and we hit a recession, that hurts. Some stuff will keep going down, like stuff you don't need, like TVs. Okay, you don't need a new. What is the large? I don't even know what the largest size TV is at this point, but you don't need it. Electronic gadgets will somewhat stay stable or decrease in price, but best based off their hedonics, they'll say, oh, even though prices stay the same, you got more features, so it's really deflationary. Even though in this day and age, you get more. It's not really deflationary if you're paying the same price. I guess in their mindset, you get more features, but you know what? That's just nature of technology. Good morning, Anissa. So that's where we sit today. What else we have? Existing home sales. It's going to be interesting coming out at 10 a.m. So in about 50 minutes. Consumer Board leading index, which has been negative. I think we have 1 month of pop positive, but it's been negative forever. Going to pay attention to that too. And what else we have? Not much. We got some bill auctions coming up tomorrow. The big thing's going to be triple/quad witching. So that's really pay attention to that, because even if we didn't have a Fed meeting, you get some interesting dynamics around major option expiration, and tomorrow is a major, major, major one. So you throw the Fed into the mix, especially with a 50 basis point cut, we can get some exaggerated moves. And you see here, it's hard to find a lot of red. We got everything green. We're running, running with the bulls. Everything green. Everything rallying. Buy it all. Everything's fantastic. Groups, buy it all. Technology, basic materials just behind technology. Basic materials. I mean, you have gold, silver, copper, all rallying. Fed watch. Let's just refresh this, because now, I mean, it's still a ways away, but they telegraph, we're going to have more cuts. Well, where is it looking? Where's the market looking now by the end of the year? Back to 4 to 4.25. So a single cut followed by a double cut in December, and then a cut in January, a cut in March, a cut in April, or May, sorry. So things falling off the cliff. But as Powell said yesterday, everything's big. It's still strong. It's still strong. Fear and greed, solidly in greed mode. PE in the cheap markets above 36. And remember, here's your massive expiration tomorrow. So, to also do not, because we're going into the holiday season and everything's hunky-dory, so pay attention to FedEx and what their guidance specifically is and what they're seeing. So pay attention to that after the close. All right. Good morning, McRangers. Green is hurting my eyes. I don't know what the exact price is, but it's huge. 98. See, everybody needs that 98. I mean, boy, you're going to burn the eyes out of your head. Don't sit too close to the TV. Does anybody remember that? Is anybody old enough? I remember my parents telling me that. Do not sit too close to the TV. You'll go blind. Well, now the TV takes up your whole room. So yesterday, after the presser had a little sell-off, but still holding Thursday's lows, especially on the closing basis. On any pullback today, I'm paying attention to yesterday's highs, 57.55, and then the 57.38 area, 57.40 area would be my two key areas. But remember, harmonic, 57.96, 5800, major option level. Pay attention to that. Closing in on it. None of this price action yet. It does not take this potential double off the table. We need to get above 57.81.50 to take it off the table. Not saying it's ever going to trigger. It's just not off the table yet. Very key support for tomorrow, coming in about 5,700 now, if we get any turnaround. But I'm watching this. Remember, daily cycles back to top, back to massively overbought, valued, and weekly cycles, we could be getting a double hiccup back there. But weekly cycle is still technically down. NASDAQ closing in on that 75 to 20,075. Then I'd really be focused on tomorrow about 2,100. Above there, the next major level is 20,500, 20,529. Key support for the NASDAQ today on any pullback is coming in just above the highs from yesterday, about 19,920. The Dow rocketing up to the next harmonic level, 42,455. 42,455. If we need something beyond that, let's see what we have here. The next key would be 43,236. Support, we're trading at yesterday's highs, but the support is coming in about 42,100, and then massive support coming back at 41,660. Russell completed 87.5. Now also pay attention to this, retesting the top area from the end of July. Next, should the Russell continue to rally through these highs, the next key level is 2358. Very key support coming back at 2246. So that's where we sit. VIX. We have turning down. We still have options expiration, but again, you're going to see volatility continue to come out of the market. It's going to be interesting about the 15 level. The DAX completed at 87.5, breaking to new highs in the futures, but 19,257 is the next target up for the DAX should it continue to break out higher. So that's where we sit there. It's easier. Here's the, it confirmed, but did not, going into close, got a little bounce back. Confirmed this little minute double, but it's now hit the other side of the rotation zone. It'll probably trigger today after hitting the first and nearly first and second target. So was it easily tradable? Not unless you tried to front run it and just hold without that close. We got the little pullback here, and same thing on the yields. The yields already hitting that first target and climb up to match major breakdown level, but it'll be interesting to see here because now you have yields climbing on the 10, not dropping into it, but now climbing back up. So could this continue even over the next little bit to return to the weekly rotation zone? Yeah, it could, with yields climbing, which would have mortgage rates going back up in the short term. 10-2s climbing too. Remember, we had a potential double that never triggered or anything else. That's where we sit with there. Above 20 basis points starts getting interesting. The timing's key, though, when we've had nothing trigger on the bearish side yet of major topping patterns. Dollar index. We had the quick sell-off yesterday, sticking at that little minor harmonic level and then bouncing up, closing. Today, both sides pushing down, pushing up, and very flat. So the dollar is not breaking lower. Remember, also, Bank of England held rates at 5%. So this is going to be interesting to see what happens with the dollar. Also, need some more clarity, especially, I know it's not directly related to OPEX, but we're going to free up a lot of stuff in the market next week. Crude, going to be interesting to see if we break above Tuesday's highs without forming a strong bottoming pattern, especially with cycles at the top. So This is very major resistance, but the next target up would be about 72.98, so 73 bucks, and then right about 74. Natty Gas trying to pull back still, does nothing to invalidate the already triggered double. Nothing to invalidate it. Gold pulling back a little. Yesterday made the high. Gold trying to rally up, pulling back a little now. But nothing really talked about. Still a sideways correction. Remember, daily cycles are rolling down, so this is still a sideways correction. Silver, though, really moving on up. Next, again, the remagnet price of silver is $31.97. $31.97, and technically, there's still a gap left behind in the futures back from May. Above there of $32.37. Copper moving up against a very key resistance level, though. If this continues to run, it's into a clear path move. I'd really like to see some kind of, with the rising rotation zone, a little pause, and then it could be a re-breakout play. And my key target area would be about 456. Again, this is not deflationary right now with the metals. This is interesting also. The yen weakening against the rotation zone. I'm going to be watching to see if this gets a stronger bottoming pattern also. Especially if it continues to rally closer to the weekly rotation zone, pauses, and then gets a stronger bottoming pattern in here. What else do we have? Spiders, let's look at the levels here. Again, 572, 572, and then 578 if the rally continues. Pay attention to yesterday's high in the spiders for very key support, 568. Until there, we're going to open up about 570, 78 area. 570.39 would be harmonic support. So the two levels I'd use going in the open on any pullback would be about 570.40, and then 572 would be my first target to the upside that I would utilize. The Qs, 481, then above that, let's take a look over here. Back to the bigger harmonics. 483.50 and then 493.51 are the targets to the upside. The support would be yesterday's high, 478.80 area. Bitcoin rallying on this, Bitcoin rallying. Remember the potential double that was invalidated and they did not trigger, coming into some very key resistance. Watch Bitcoin again on a closing basis, 64,540. Ethereum, yes, bounce, but nothing to invalidate the double yet. Just sort of doing a channeling correction, and this could take a long time to play out. Nothing to invalidate that. Unless we trigger this double bottom, which is a long way off. Oracle. Have they upped their 2030 guidance yet? On any rotation up, I'd be watching for a topping pattern come in here. Because the over exuberance with Oracle got insane. Right now, I'd be watching for some kind of, if it continues to pull back, a little bounce around the rotation zone to possibly setting up a stronger topping pattern. This got really out of hand to the upside. So is there a topping pattern now? This is the first pullback. Then I'd watch for the secondary bounce to set up some kind of topping pattern. If it does break out to new highs, these would be the harmonics I'd use right there, which would make the next target about 180. And when I say it would be a potential topping pattern, why? Because that secondary reaction, okay, will be very key. Still, the trend is up. So I need a topping pattern to form and then trigger, but you see so far there's pretty decent selling pressure up here. All right. What else do we have? NVIDIA. Still the key level on a closing basis to watch is 119.89. Has not closed above there yet. That's in the short term. Tesla, the key level to watch is 237. Just go 238. Apple with the big iPhone release tomorrow. Nothing's changed. It still has the massive potential weekly double top in place. This does not, even on a push up yet, it does not invalidate it yet. So those are things to watch still going into next week. Until then, let's see. Don't worry about catching the exact top, Sterling. Don't worry about it. Going into the open, I pay attention to this low at the 8 a.m. bar from the 15-minute bar. I pay attention to the low at 57.63. All right, because you do have a little mini potential double there. That's what I'd watch there. All right. With that, that is about it for today. Remember, I mean, a lot of people are all of a sudden everything's Fed focused, which is a major consideration with the 50 basis point cut. But that's in your rearview mirror. You still got short-term juice from that, but you also have the magnet of the option expiration. And that's now the real key focus over the next day, going into Friday's close. And then once that's freed up, we'll really see what the markets, how it's going to shake out the beginning of next week. Okay? And by the way, from my perspective I've talked about this before, the biggest hedge window is between September OPEX and October OPEX, from my perspective. Even if the market rallies, any hedges I may have do not expire or get removed until after October OPEX. That's just something I've learned very well from a lot of years. Okay? So take that for what it's worth. Why did they sell off? I think because some things think the market, it's being too aggressive and yields are climbing or holding steady on the longer term. Remember, if inflation comes back, especially with all the government financing of stuff, okay, if inflation comes back and gets sticky, rates can get sticky up here. Short-term rates will drop, okay, like bills and everything else. And remember, the twos will continue to drop or not. They're still bouncing today a bit, but you look at the tens and twos, the tens are up 1.5. I'm not talking basis points, I'm talking percent based off of yesterday's close. They're up 1.63. On a yield basis, yesterday's close was what did we close at? 3.68. Today, the futures, 3.74. The twos are up only. See, the twos can hold a little more, but this, you're going to get the steepening, which is going to really start affecting the 10-2 spread. You see it continue to climb. So the twos can remain, outpace it. I think the we could get some stickier inflation. That does not mean returning to 7%. Stickier to me means sticky above, well above 2, like closer to 3. That's my. When's October OPEX? Hold on, I'll give you the exact date right now. Wait 1 second. Once I find my window. Here it is. October OPEX is the 18th of October. So this, the next, 4 weeks are very key for me. And then after the October OPEX is generally when you start getting the year-end rally machine potentially on. But we could have a a closer rally machine also, because just some other thoughts going in. Week after October 18th, I will really start focusing on a bounce. But if holiday sales, they start coming out after Black Friday, and remember Thanksgiving, it's a short, Thanksgiving's not till right before November end. If we start getting disappointing holiday sales, Black Friday, Cyber Monday, blah, 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 the holiday rally could come to an end potentially earlier in December. That's just something I'm watching out for. Again, we're a long way off from there, but I'm keeping an eye out for that. Let's just see where the tick opened today. Woo! Now there's a tick opening. Close to, that's a massive tick opening. Last time it was that high was back from August 24th. That is across the board a massive opening in the tick. So as long as this little minor double does not trigger, I'll be watching for some stability come in here. If we get another bounce in the tick without this triggering, then I'll start watching for the secondary push higher. We'll probably have a very good feel, Sterling. It's probably gonna be Harris. You know what? Period. I doubt with all the shenanigans and everything else, it probably gonna be Harris, and we'll probably know going in the election if they can keep Trump alive that long. So I'm not extending. I mean, I might put on some minor things or have something minor, but not the major portfolio hedge. You always could, but you know what? I think you'll see also that it'll put up, if Harris does win, it'll put upwards pressure on the market. You're welcome, Patrick. So again, I'm going to tell you something. We still trade what is. You still trade what is. I have thoughts what could happen, but I still need to trade what is. I still need to. Again, we still have a massive potential double top. That might never, ever, ever trigger. The trend is still up. Look at the rotation zone on the weekly basis. But if we do trigger some of these topping patterns, then I'll sit up and take notice. Doesn't, well, why do you have a hedge on? Because this is traditionally the worst time in the markets yearly, and anything can still happen, especially after September OPEX. Penny stocks are penny stocks because they're junk on the most part, dark screen. Why is something a penny? And when I say a penny, it could be 10 cents. Why? Because they're not the companies you want to trade. Yeah, now they're going to be traded in increments of half a cent. You can have half a penny stock because just being the penny wasn't cheap enough. Okay, at least if you're going to trade smaller caps, to at least trade stuff in the Russell. Penny stocks are a gambling thing. All right, with that, I shall talk to everyone later. And I hope everyone has a wonderful, wonderful day. OPEX tomorrow. See everybody then. Bye for now.